Hi everyone, welcome to Tuesday, and of course every Tuesday we take a look at the performance of the main board of the New Zealand Stock Exchange, being the NZS 50. Before I do, just that general housekeeping, of course, this is for educational purposes only, certainly not intended for any personalised financial advice. For that, you do need to go and talk to your own personal financial advisor. But before I jump across, there has been a little bit of interest in perhaps doing a Learning to Invest seminar. Keen to obviously get your feedback if you'd like me to run one of these. It will be free, and it will be a very, very elementary class basically, introduction to investing. So yeah, keen to obviously get people on the board with doing things. And it's just to make it clear, it won't be what I talk about here, although I can obviously go into that, but it's really just getting you to dip your toe in the water as the different types of investments that are available, and hopefully get you started on your journey. So let me know in the comments. Also, let me know specifically what you'd like it to contain, just so that I can make sure that it is going to be relevant for you. So let's take a look at the NZS 50. Okay, so I've got our main indices up here on the screen, and this is Tuesday morning that I'm recording this, so the market isn't yet open. However, it is, if I look up here on the left, it's looking like before the market opens that there is a little bit of pre-trading going on, and it is down sort of about 0.82% just for today already before the market opens. And if I take a look here on the very right-hand side, you can see that very last candle. It is a red one, and it is downward pressure, so there has been more selling yesterday as well, even though I have got the overall chart up on a weekly basis. The thing that I have taken note of as well is down here I've got the ATR, which is the average true range or average trading range, depending on what you like to refer to it as. I've got that over a 21 period, so in this case it's a 21-week period. I use that, so I'll take that figure to 253.37 and I'll divide it by the current price of the New Zealand main board. And that just gives me an idea as to the volatility. So how much sort of potential swings and movements is actually happening in our index here in New Zealand. And by doing that, it's actually just slightly crept up to just over 2%. It's nothing negligible, but it is starting to creep up. And you can sort of see that with that trend line, really, it is starting to creep up. If it gets to about 5% for me, there's too much volatility in the overall board, main indices, and it is certainly a time that I want to keep out. But let's just take a look. We always run the indicators over to see what is happening. So the first one that I use is the 30. So the 30-week moving average. I always make it the exponential. And it does give more weight to the performance of the more recent end of the market rather than the earlier end of the market. But by being consistent means that I'm looking at the same results constantly rather than chopping and changing and trying to think, okay, which is the best methodology to use. Just move that over. And you can see here, basically for the last 3 weeks and the start of this week, our main board is trading below that 30-week moving average. For me, that is a complete red flag. I definitely do not want to be entering into the market at that stage. We'll also put on the 15-period moving average. And again, I make that the exponential. We'll change the colour so we can differentiate it. Here we go. So obviously the market is trading below that 15-period moving average, and they are getting so close to touching. It's it looks like that could happen. So if the 15-week moving average closes through the 30-week, it definitely means that we're into a downtrend. Okay, obviously, hey, it could just get to where it is now and rebound up. Only time's going to tell us that. But really what I'm trying to say is, for me, when the market is trading below both of these moving averages and that 15-week crosses through the 30, so the faster week goes through the slower moving average, then we are definitely in a downtrend, and I will not be looking at entering any new positions. That is hard and fast binary for my rules of investing, okay? Because like they always say, is that when the markets are trading below those moving averages, that is when more sinister things could potentially happen in a market, and it generally does. And I'm happy to sit on the sidelines, hold my existing positions and wait for those markets to turn around, because they will turn. And if we can go back in time. So here's a very good example here. So around sort of the middle of January 2022, you can see that blue line crossed through the red line and the market continued down for quite some time. We did have a little bit of a rally here from about June in 22, and it reached a little bit of a high point around early August in 2022, but it continued going down, and that's what we want to avoid. Okay, so that market never really started recovering again. You can see here the moving averages never really crossed until September 23, and it was a very short-term rally, to be honest. Markets carried on. We had a short-term rally. They went sideways for about 5 months, and then, as you can see, the moving average fell back through that 30, and so the 15-week moving average fell back through the 30. We had another downtrend, and then it never started improving again until about January last year. And from then, if you look at this chart, there's been times like around January 24 where the markets, August, I should say August. There were times there where it got very close around August 2024. And then we did have a very strong rally. Okay, but now it looks like potentially that could be over. And the market, like as you can see here, the last 2 trading weeks have been down weeks, with the start of this week as well. Now, I've been seeing a lot of posts lately around what should you do in the markets and when there are times of turmoil. And it is really important, in my view, to have a plan written out as to what you're going to do. Now, if you've just gone and invested into the indices, which is fine, because the indices is a great way to get exposure to obviously the top 50 companies on the New Zealand Stock Exchange. And if a company falls outside of that top 50, the indices will automatically replace it with another. So you don't have to worry about that stock selection. And if that's the way you're investing, that's great. Time is on your side. You don't necessarily have to wait and try to go, gosh, when should I be jumping out? Because sometimes if the market's already moved against you, it may be better to stay in, depending on your own goals. So really, in my view, it is important to have a plan written out as to not only when will you enter the market, but when will you exit. And I've just done a little bit of research here. So for the NZSX 50, for the past month, it is down nearly 7%. It's down about 6.97%, so month on month. The 6-month return is down 3.99%. And year to date, so from this year till now, it's down 7.2%. If we go out a little bit longer and look at the performance over a 1-year basis, returned about 3.39, so just under 3.4% positive. If we look at it over a 5-year period, it's done 28.95% over the 5 years. So that's taking into account those dips that I was just showing you. And if we average that out and say, well, what is the average return on a yearly basis, but taking the 5-year figure, it's working out at about 5.79%. Now that is fairly respectable, especially if you're comparing that to bank term deposits. I mean, recently you might have been able to get a term deposit with a 5 in front of it. Highly unlikely that you would be able to do that today because interest rates have started falling. So that's really what I'm getting at, is when you're looking to invest in a main board like this, you've really got to have time on your side. And even if we take into account this COVID dip, which you can see here was 2020. So those returns over the 5-year basis has taken into account that. So, and that was very sharp and very severe. So what I'm saying is you've got to have a longer term view. And if you're investing into an indices, it's a relatively lower, it's not completely low risk, but a lower risk vehicle than trying to go into an individual share. So I hope that's helped. I don't want to confuse you too much. Happy to answer any questions on that. And also, if you've got any shares that you'd like me to review, pop them in the comments or send me a direct message. I'm happy to do so. And in fact, I've had a special request from someone to take a look at Contact Energy this week. So that's what we will do. Also, remember to let me know if you would like to do an introduction to investing course. It'll be free just to give you an idea as to what types of investments are available and hopefully how you can get started on that train. Investing has been a passion of mine. I've been doing it for years, and I've actually specialised in giving advice on that for the last 20 years of my career. So happy to see where you're at and if we can get you started on your investing journey. Thanks, and have a great day.